So does California tax retirement income? The answer is, duh, of course. California taxes everything, right? But the question is, how do they tax it? And what does that look like? And maybe there's a way we can even do it better? Could we even avoid taxes altogether? Stick around, that's what we're gonna talk about today. All right, so maybe you're wondering, like, is my hard-earned money gonna be taxed in this beautiful golden state of California? The answer is, of course it is, right? California taxes a lot. If you live in California, you already know this. Your property taxes are sky high. You're still paying a decent sales tax on everything. And then on top of that, they want to tax you on your income. And that's even in addition to what the government already, the federal government does too. And you got the state of California want to tax you as well. And it's already freaking expensive to live. How do we have one, minimize our taxes, or two, avoid them altogether? That's what I want to address today is what are those strategies? What are the taxes, but how can we avoid them to get better income in our life? Because I like cash flow, because cash flow creates freedom. Okay, so if you're in the state of California, the income tax gradually increases, just like the federal income tax does. Some states have a flat tax, like I live in the state of Utah, it's just 4.55% flat no matter how much money you make. So obviously the more money you make, the more you're incentivized to make, and you love it in this state. Well, in California, as you make more money, and depending if you're married or single, that number goes up. So you can be anywhere from 1% to 12.3%, in addition to the federal income tax you have as well. So for example, if you're somebody in the state of California, and let's just say that you are married, and you're gonna make over, say, $100,000 a year, and I'm not even looking at the state numbers right now. The thing is, with $100,000 a year, you're already gonna be pushed into like that 22% federal income tax bracket, but with California, you're also going to be pushed into roughly about a 6% bracket as well. So you pay 22 plus 6, now you're like in a 28% bracket. Even worse if you make a few $100,000 a year, which like many of our clients do that come out of California. In fact, shout out to my California clients because there's a lot of you out there that we work with. But one thing I've noticed is that if you make a couple $100,000 a year, you're going to be in that situation. You're going to be closer to 10% on the state tax, and you're also going to be paying like 32+% on the federal. So you're gonna be seeing over 40% of your money losing to taxes. And so you have a choice. Either one, you try to go broke by not working as hard, which is not really a great option. Or two, you say, well, is there a way to minimize it? And many times people will make the mistake trying to delay that tax to a later date. Now, you're gambling when you do that, right? For example, if you have a 401k or an IRA, you think, oh, good, less taxes for me. Well, all you really did, if you put your money in a 401k or an IRA plan, all you did is you push that retirement income till later. You still have to pay taxes on it down the road, federal and state. Just so if you're asking, do I have to pay California state tax on my retirement income? Yes, you do. And it's just like normal income. The highest tax rate you will ever pay in your life is ordinary income tax, which not only affects your job that you're getting paid on, but it also affects your retirement income. It is ordinary income. It's the highest tax bracket you could possibly be in. You would be better off in some cases having other investments that might have a lower tax bracket, like real estate. Even sometimes mutual funds or stock trading can actually have less taxes depending on your tax bracket, right? So it's kind of crazy to think that your retirement income, you think, oh, I saved on those taxes, but you really didn't. You just pushed it to a later date. And the real question you have to ask yourself is, in the future, am I betting that taxes are gonna go up or down? I would tell you probably about 99% of the time anybody asks that question for, they probably said the same thing you said, which is, I think taxes are going to go up, especially as we've seen that the governments are going more and more bankrupt, more and more broke all the time because they spend so much money on the programs that they can't even afford to do. So where do they go? They go for the people that usually make the most money. And sadly, it's not necessarily their rich friends, the wealthy, the ultra wealthy friends that they go for. They tell you they're going to tax them, but who usually gets taxed? It's us. It's the rest, the regular people, right? And that kind of sucks. We don't like that. So just be aware that if you have retirement income that you're getting from pulling off from 401ks and IRAs, yes, you will be taxed, and now you're just gambling on that future, hoping and praying that either one, you have so little income to live on, you're gonna live so cheap and so broke that you can be in a lower tax bracket finally, or two, you hope that they don't raise tax rates anymore, which is kind of a fool's errand in some cases, isn't it? Because right now, even on the federal side, we're on one of the lowest tax brackets we've been in history, and that's now. What's it gonna be like in the future? So one other thing I'll ask too, because a lot of people ask this question, maybe you're asking this, maybe you're not. People ask about Social Security income. What about that? Good news is, no, Social Security income is not taxed in the state of California. So if you have Social Security income coming with your retirement income, you're fine. But just know that that does count as income, which bumps up your normal retirement income, and that money does get taxed. So just know that your IRAs and 401ks do get taxed, while Social Security does not by the state of California, but the federal government still taxes you on Social Security. So just be aware, although you're not paying state tax, you're still paying federal tax. So the next question you're probably asking is, well, is there any way I can avoid this tax altogether? Can I be tax-free? The answer is yes. There are a few ways to do that. Number one, there's Roth IRAs. Now, here's the thing. We already know this because if you take that money, you're paying a Roth IRA with after-tax dollars. You already had to pay the state tax to be able to put in the Roth IRA. What you're banking on, literally banking on, is that you hope that as the money grows inside of there, when you pull it out in the future, especially if you're gambling that taxes might be higher in the future, you're hoping that, of course, when you pull that money out, you now no longer have to pay tax because the Roth IRA does not get taxed on that money when you pull it out. It grows tax-free and then it comes out tax-free. Well, as long as they don't change the rules on you. If they change the rules on you, then everything I said is obsolete, right? If they decide to tax Roth IRAs, they can make that change at any time. But for right now, Roth IRAs are tax-free. Now, there's a few issues with that. One, right now, depending on your age, you can only save $6,000 or $7,000 a year into a Roth IRA. It doesn't give you a lot of hope. Now, you might have an opportunity with your employer, if you're working for an employer, you might have the opportunity to do a Roth 401k. Now there you could probably put in a little over $20,000 a year plus get the employer match. It might be able to build up faster because $6,000 or $7,000 a year for the next 30 or 40 years, you do the math at like 8% a year compounded, it's pretty dismal. It's not fantastic. And so that's where having maybe a Roth 401k could give you a little extra bonus. Now there is a thing called a backdoor Roth IRA, and I say that this is in 2024. It's possible now, but there's been lots of talk with the government of closing that backdoor Roth. And all that means is if you have IRA money right now, you could convert it to a Roth IRA, today. Yes, you will pay tax today, but then that can grow tax-free and come out tax-free later on. So this is especially useful if you're in a place where maybe you're in a lower income bracket today, right now, and you just want to get that to a tax-free place because you'll probably be taxed more in the future. Could be an option for you. And it might not be something you try to do all at once because it might push you into a higher tax bracket. So be sure if you're going to do something like that, talk to your CPA, get advice from them, make sure you consult your financial professional before just taking action on something like that. But just understand that that is an option. You could actually move your money into what's called a backdoor Roth and be able to transfer that IRA over. And yes, there have been politicians saying they want to close that back door for specific people, especially the rich people. They don't want them to convert and then avoid all this tax. Although they haven't closed that door yet, it could close in the future. So be aware this could have a ticking time limit on it. Now, there's another option you can do too. There's even things like with life insurance, because people say, well, that Roth IRA, I can only put $6,000 or $7,000 a year. Or maybe the Roth 401k you do $20,000 a year, but I want to live a much bigger lifestyle, or my timeline for getting retirement shorter. That's where we talk about infinite banking strategies. Especially if you go to moneyripples.com, you see a lot about that. But our infinite banking strategies, you can actually put into tax-free place. It's just like a Roth, but it doesn't have all the rules. And if they change the rules, you're safe because they have a contract of when you get into it at that time. And so you can actually load up to 25% of your stated gross annual income into these policies with some of these companies. That means if you make $100,000 a year, you could save $25,000 a year. If you make $1 million a year, you could save $250,000 a year into these things, accelerating much, much faster and to be able to grow and build your wealth. And that's money you can actually use now to invest versus waiting till later. And yes, you could build it up for retirement, and it could actually be tax-free income that gives you a good guaranteed stream of income down the road. The great thing about using whole life insurance, not these other universal life and all that kind of stuff they talk about out there, those things can be a big gamble, and often people get to retirement realizing they can pull out much less money than they thought that was possible before. So be aware of those universal life that parade themselves as saying they're infinite banking, like the Nelson Nash thing. If Nelson Nash were alive today, he would say, do not use those at all. Whole life is better, it's guaranteed, it's much easier to use, and I know the Nelson Nash Institute even supports that today. So infinite banking can be a great strategy to use, even if you're doing a Roth, but maybe you've maxed out your Roth, you look for that next thing. It could be another great strategy. You can find out more information at moneyripples.com. But let me just finish up with this. Let me talk about some of my clients I have in California right now. I had one client that he actually saved up $1 million in his 401k plan. He saved for years and years. He was 60 years old. He says, I'm ready to live on this money. And then what is he told by the financial advisor? Well, good, you can pull off 3% a year, because we talk about that number all the time. You can only pull off 3% a year if you do traditional retirement planning. 3% a year, that means you can live on $30,000 a year with your $1 million. Now, any of you live in the state of California know that's a freaking joke to live on $30,000 a year when you're a millionaire, right? That's not acceptable, and Dan didn't think so either. And so he started searching around, listening to podcasts. He found ours eventually, and then he said, you know what, I want to do something different. What did he do? He went and he actually invested in different types of real estate, everything from duplexes that somebody else manages. He got into apartment complexes where he had part ownership in that, but he wasn't doing anything with it. He was a hands-off investor again. He did things with oil and gas and get paid royalties and whatnot. So some of that even has some tax advantages between the apartments and the royalties. He was getting paid over $100,000 a year, but paying less in tax because some of those had tax benefits that he would not have gotten had he just left it in his IRA investing in mutual funds. So he was able to reduce his tax and make more than triple the income with the same dollars, and he had real assets backing it up. You know, I've had other clients too do the same thing. You know, one client was in San Diego. He said, you know what, instead of me, it took him, by the way, a couple of years to buy into this. I said, instead of buying in California and trying to do real estate here to get some of those tax breaks, what if he invested in other states? States like he went up buying in Louisiana. He sold off his duplex in California, took the $700,000 equity, bought other properties, and now over the last 5 years, he went from $200 a month of profit on his rental to now $8,000 a month of income that he's getting from that. He's now getting that passive income that has tax advantages in real estate, because real estate has tax advantages. And if he becomes a real estate professional, he can even get bigger tax advantages because it's a business instead. And then next thing you know, he's not worried about the state tax. He's not even worried about the federal income tax either. He's able to reduce his taxes. So many different things you can do that often your financial advisor will never want you to know about. And so if you want to learn about how to do that, go to moneyripples.com right now. Be sure to join our email list so you know what kind of strategies are possible in your situation. In fact, you'll even notice you might be able to make way more passive income than you thought was possible. So check that out at moneyripples.com.